Good afternoon, everyone. So I'd like to thank Q Energy. Managing, delivering, returning is a catchphrase, three-word catchphrase. So as Chrissy mentioned, I was last here in 2023, and we've got 15 or so presenters today, and I expect that most presenters think that they've got a great presentation, investors are listening, and they're making a difference. So I like to think that. So I like to think that after my presentation in 2023, all the investors in the room went out and bought a Q share. 6.1 cents, closing on almost 2 years ago. So if they did that, come April 2024, they received a 2 cent dividend. It's a pretty good return. It's almost 30% on that 6 cent share. September 2024, another 1 cent dividend. Q's become a dividend-paying company every 6 months. Had another dividend paid in March 2025, and have a dividend to be paid at the end of this month. 4 dividends in a row. And they have a Q share price now of 12.5 cents. So our investor who listened well and understood the story had a capital gain of 97% in 2 years, and a dividend yield of 74%, and the total return on a Q share since I last presented, for everyone listening to the story, is 170%. So as Chrissy mentioned, the numbers speak for themselves. And now I'll get into the reason why. So Q has a portfolio of non-operated assets around Australia, New Zealand and Indonesia. And we produce about 6,000 barrels of oil equivalent a year, or this year. It's been consistent for a number of years, as we'll see. Revenue of $55 million. Our production is sustainable from these assets. We drilled 13 new production wells last financial year. That's 13 wells that actually delivered oil and gas out of the ground. And we have more planned at every one of our assets in the near future. We returned a very good dividend yield and capital gain over the last 2 years, but even in the last year, the financial year, it was a 14% return based on 6 monthly dividends. And we've paid out $31.5 million over the last 2 years on a market capital of $80 million at the moment. Our assets are located in New Zealand, down the bottom. Maari, we have a 5% equity in offshore oil production. Central Australia, the Amadeus Basin, Q's interest range from 7.5% to 15%. Gas production into the Northern Territory and the east coast of Australia, which we've heard about. In Indonesia, Q is the largest ASX-listed revenue-producing oil and gas company. We have 2 assets. Offshore, the Sampang PSC has been in production for 20 years, produces gas to fire a power plant for East Java. And the Mahato PSC, onshore oil production in Central Sumatra Basin, which is where we're drilling most of our wells at the moment. We've got a clear strategy. Maximise the value from our existing assets. These are the wells we're drilling, the developments we're doing, 13 wells last year. Keep our shareholder returns attractive. FY25 return 14%. 2-year return 170%. And our growth will be from known areas. We operate in 3 countries at the moment. We know those countries well, and that's the easiest, lowest risk areas to grow for new projects. In FY25, revenue was almost $55 million. The bulk of it was from Indonesia, but also significant contributions from Australia and New Zealand. EBITDAX of $30 million on that 55 is a very good EBITDAX margin. We are debt-free, and at the end of the financial year, had almost $11 million in cash after distributions through the year. Q's share price at the moment is about 12 cents, and that's a graph over the last few years, and you might want to guess when we started paying dividends out of that chart. So at the start of 2024, when Q started paying dividends, we got a good support from the share price, and since then have continued to show the sustainable value we can bring. So our market cap is around $80 million at the moment, no debt, and fairly modest multiples, 2.3 EV, so EBITDAX multiple. And why is this? We have oil and gas production, high margin. If you look at the right-hand chart, the line there shows our margins are up in the 40 to 50% from oil and gas. We have 4 projects that contribute revenue, diversified, different countries, different products. And our annual operating revenue has increased over the last few years, but you can see has maintained a very high plateau sustainability there. Even through changes in oil price, we've maintained the growth in revenue. Out of the $55 million of revenue last year, 24 million of it came back to us as net cash from the operations. Out of that 24 million, we used 15 for reinvestment in CapEx and paid out $14 million in dividends. Very high cash flow business we deal in. And if you look at the sustainability of that cash flow, the key thing to look at is the production. So the bar chart on the right there shows rock steady production over the last 4 years. 600,000 barrels plus or minus 5%. Through thick and thin, through different projects, we maintained our production through development. At the moment, last year, we were about 70% revenue from oil, where we produce oil in Mahato in Indonesia and Mari. That's tied to the Brent price, so we're exposed to Brent pricing, but we also have a portfolio balance with fixed price gas contracts through the Amadeus Basin onshore Australia and our Sampang field in Indonesia. Again, sustainability, a balanced portfolio through the thick and thin of the oil price scenarios. A couple of slides now on our assets. So the Mahato asset in central Sumatra is an onshore oil and gas asset, and we drilled 11 wells there last year. So that's a well a month. Since the end of the financial year, so what are we in September now? In the last 2 months, we've drilled 2 more wells. Those 2 wells alone have contributed 2,000 barrels of oil to the joint venture. We'll continue to drill wells like that and also shift in the future to developing another reservoir in the field called the Talisa Reservoir. So we'll develop what we know and then we'll develop what's next. There's also exploration running room in the Mahato PSC. So we'll be drilling an exploration well sometime early in calendar year 2026. You'll see the chart down the bottom is the progression of the number of wells that have been drilled. So we're up to over 30 wells now, and this is effectively drilling 1 well a month. Also in Indonesia, we are a partner in the Sampang PSC. This is an offshore gas field off Madura Island. It has been producing gas for 15 to 20 years, and Q's been a partner for that long. Reliable gas to Indonesia to offset power that may otherwise be generated through coal. The Oyong and Wartel fields have been producing for 15 years and are now in decline. The good news is, 5 years ago, we discovered another gas field called Pauspiru, and we're just about getting progress to FID that project. That will be a single wellhead platform, simple development that gets tied into an existing pipeline through to a market that we're already sell gas into. It doesn't get much simpler. Takes a bit of time to get through some Indonesian government processes, but we're getting there. And the other opportunity for Q here is that we have a joint venture partner who, through corporate decisions, has decided not to participate in the permit going forward, including this development. And under normal joint venture arrangements, if a partner decides not to participate or move forward and withdraws, then the other partners get their equity for free. So we have the opportunity to increase our participating interest from 15 to 25% in a gas development that by 2027 could be producing 20 to 25 million cubic feet a day. We are partners in onshore Australian fields, produce gas from Mereenie, Palm Valley and Dingo, operated by Central Petroleum, delivering gas to the Northern Territory, which uses 85% of their power 85% of their power is generated by gas. We also have contracts that go across Northern Gas Pipeline into the East Coast, so it can supply into that market. These fields have been reliable suppliers of gas to the Northern Territory and East Coast for many years, and have a lot of running room to go to. We've drilled 2 wells last financial year in Mereenie, West Mereenie 29 and 30, overachieved and are still outperforming our expectations, which leads to more confidence in drilling more wells, and the joint venture is certainly looking at planning more wells, which is in the left-hand chart. Mereenie's an elongated structure. There's lots of wells, but lots of room for more. Palm Valley is on the right side. It's less wells in the field, but certainly more planning from that joint venture to develop wells to go into the gas market in Northern Territory or the East Coast. And the Maari oil field in New Zealand. Q has been a participant here again. It's been producing for 15 years and produced its 50 millionth barrel last financial year. Your typical late life field should be in decline now. This chart gives an indication of the continuity of Maari, and in fact, in August, Maari produced about 5,600 barrels of oil a day, which is higher than 5 years ago. Great story, water flood, joint ventures operating with the operator for a great technical solution to optimise production in a field. We've recently been granted a 10-year extension to that permit, so that's now out until 2037. And having 10 years available to you also allows more things to be looked at and potential better optimisation or more work that can be done. So back to our theme, managing, delivering, returning. Q manages a portfolio of assets that are geographically diversified, product diversified, and gives us strong free cash flow. To sustain our production, we'll be delivering developments planned at 3 of our production areas, potentially 4, but 3 in the planning, to keep our production sustainable and up. And we have the balance sheet strength to do that. No debt, very good cash flow. The third leg, returning. We'll continue to review our potential to pay dividends every 6 months as part of our policy. And there's still very modest valuation multiples in our share price, I believe. Potential for more capital return, capital gain through the share price as we continue to show development and growth of the company. Thank you, Chrissy. That's all, and I hope in 2 years more I can come back with a similar story. Thank you.